For entrepreneurs and expats eyeing East Asia, Hong Kong has long been whispered about in the same breath as tax haven. While the city is undeniably one of the most tax-efficient countries on the planet, the myth of a zero-tax life can lead to some expensive misunderstanding. Hong Kong is not a zero-tax zone, it is a smart tax zone. With the vast majority of high-earning expats and business owners, the figure to keep in mind is not zero, it's 15%. Understanding why this number serves as anchor of the Hong Kong experience requires peeling back the layers of a system designed for simplicity, transparency, and competitiveness. Unlike the complex global reach tax codes of the US or much of Europe these days, Hong Kong operates on the bedrock principle, the territorial source principle. Welcome to Taxplained, explaining tax so you can minimize your tax burden and maximize your freedom. Most countries operate on a worldwide taxation basis. If you are a resident of those countries, your government wants a piece of what you earn in London, in New York, and Tokyo. Hong Kong ignores your global income. The Inland Revenue Department only charges tax on profits or income that arise in or are derived from Hong Kong. This territorial angle is the differentiated advantage that sets the city apart. If you are an entrepreneur running a consultancy that services clients in Europe and North America, and your operations are structured correctly so that they can qualify as offshore, you may find that your Hong Kong entity owes nothing on those specific income streams. However, the moment your activities like negotiating contracts, processing orders, or providing services take root on Hong Kong soil, the taxman enters the room. And this is where the 15% hallmark begins to take shape. For expats, the salaries tax is the most immediate concern. Hong Kong uses a progressive scale that starts as low as 2% and climbs to 17%. However, the system includes a unique safety valve known as the standard rate. For the 2024-2025 year assessment, the standard rate is effectively capped at 15% for the first 5 million Hong Kong dollar of net income. Even if your progressive calculation suggests you owe more, the law allows you to pay the lower of the two amounts, the lower. This means that for the high-flying executive or the successful startup founder, your effective tax rate is structurally prevented from spiraling into the 30s or 40% brackets, which you can see in other global financial hubs and of course here in the West. You keep more of what you earn, providing a liquid capital advantage that is hard to replicate anywhere else. Are you looking to optimize your transition to Hong Kong? Then please contact our expert tax advisory team today to ensure your global income stays protected. While the 15% cap on salaries and corporate profits for in or unincorporated businesses rather is the headline, the real number argument is bolstered by what you do not pay. In most Western economies, an entrepreneur is taxed twice or thrice. Once on the company's profit, and again when they try to take that money out as a dividend. Hong Kong removes this friction entirely. There's no tax on dividends. Once the company has settled its profits tax, which feature a two-tiered regime starting at around 8% for the first 2 million Hong Kong dollars, the remaining cash can be distributed to shareholders tax-free. Furthermore, Hong Kong does not levy a capital gains tax. For an expat investor or an entrepreneur looking towards an eventual exit, the ability to sell shares or assets and retain 100% of the gain is transformative for a wealth building tool. For those running a business, the 15% figure is also the benchmark for profit tax for unincorporated businesses, while corporations enjoy a standard rate of 16.5%. However, the real number remains closer to 15% when you account for the generous two-tiered system. Small and medium-sized enterprises only pay roughly 8% on their initial profits, meaning the effective rate for many growing businesses stays well below the 15% threshold until they reach significant scale. It is also vital to understand the operations test. The IRD looks at what you actually do to earn your money. If you have an office in Central, hire local staff, and your decisions are made in the city, the IRD will righteously view your profits as Hong Kong sourced. Attempting to claim offshore status while living and working full-time in a mid-level apartment is a recipe for a horrible. The reason why I emphasize the 15% or the 16.5% for corporations rather than the 0 is that it provides a stable, predictable environment for financial planning. In many zero-tax countries, you're often trading tax for high indirect costs, a lack of infrastructure, or grey list reputational risks. Hong Kong, on the other hand, offers a world-class legal system, a premier financial gateway to mainland China, and of course a highly sophisticated lifestyle, all funded by a system that asks for just a modest flat-style contribution. For the expat, this means your take-home pay is remarkably close to your gross pay. For entrepreneurs, it means your pre-tax profit is remarkably close to your post-tax reinvestment capital. Hong Kong's tax system is also not a disappearing act, it's a partnership. By capping the government's share at roughly 15%, the city ensures that the most ambitious people in the world have a reason to stay, to build, and to succeed. It's a system built on the belief that if you let people keep 85% of their hard-earned success, they will create enough economic momentum to keep the city thriving for everyone. Navigating the territorial source principle and of course the various allowances, from child allowances to the 60-day rule for frequent travelers, require a thought-through approach. While the 15% cap provides the ceiling, smart planning can often bring your effective tax rate even lower. For the modern expert and global entrepreneur, Hong Kong remains the gold standard for tax efficiency, without of course the baggage of traditional tax havens. It's simple, it's fair, and above all, it's designed to let you win.